All right, folks. Now, my next guest still likes this market as well. Says that stocks at this level, they just continue to climb this sort of wall of Wall Street skepticism. And he does point out things like just this past earnings season, 12.8%. The street was looking for less than 3%. Right now, the street's looking for about 7 and 8%. He thinks that's way too low. So I'm going to bring in Landsberg, Bennett, Private Wealth Management, CIO Michael Landsberg. So, the earnings thing to me is amazing because I can't remember the last time the street got it right. Now, it always feels like the analysts who cover these stocks give themselves a little cushion. Well, first, management gives themselves a little cushion. Then the analysts give themselves a little cushion. And that's why the whisper numbers used to be hot. But you think that there's too much underestimating this rally?
There is. I think there's not a lot of people that like this market. When you look at the positioning from the CFTC futures, when we got the data before, people were very short this market, very skeptical. And what's happened is they played catch up. And I think that's important. I think they're going to play catch up this quarter. So far, we've gotten about 10% S&P earnings. So far delivered, they've been double digits again.
Like Aaron, though, you're saying, hey, look beyond the Mag 7. And, this is the Mag 7 versus the 493. And the 493, they're going to start to build. At least we anticipate they'll start to build. But so the Mag 7 also. But you think this build in the light green number will represent opportunities for investors?
I think, Charles, there's very few people watching this that don't have exposure to the Mag 7.
Okay.
They've given up on the other 493. And so that's really where a lot of the opportunities are. It's not to get rid of the other 7. It's basically to say, hey, we need to up our exposure to the other 493. Some of them are growing faster than the Mag 7. People just don't own them.
Right. All right. Let's talk about the Fed. Barbara was on already saying the Fed is your friend. No one disagrees with that. But I was reading your note. October's given, right? It's 98%, 98.9%. And maybe after that, the street's still looking for a series of cuts, at least a couple more cuts. But you're not sure after October if the Fed will necessarily be accommodative.
My concern is inflation's going to pick up this number we're going to see tomorrow. And I'm not sure if it's going to continue to be higher. Energy's fallen off a bit, so maybe I'm a little bit less worried about October. But I think we always price in more cuts than we get. And so I think what happens is everybody banks on all these cuts. I think you should be buying stocks based on earnings, not on what the Fed's going to do. If earnings are good, stocks are going to go higher.
Let's talk about some individual opportunities. One name you like here is a Federal Signal. What do they do?
And that was a name I brought you about a year ago. They're like one of the most boring companies you're going to find. They make street sweepers. They make sewer cleaners. It is boring. Double-digit EPS and double-digit revenue growth. Stock's up about 40% in the last 12 months. We have infrastructure problems. This is a good company that does all the cleaning and all the stuff around your cities and states.
I love boring. I love boring, right? But we need it. Everything you just mentioned, we have to have.
Some portfolios need to have some boring. Everybody's got all the sizzle. You need to have a little bit of steak in it.
And one thing also, a lot of portfolios have things in it that the person who owns the stock knows nothing about. Yeah. We all understand the sewage thing a little bit. D-Lo, now this is a kind of intriguing because the gaps, oh my goodness, the gap down, and then of course we've gapped up. So may not be for the faint of heart.
It's not. I mean, the story here ultimately is it's a payment provider solution in emerging markets. They work with about 29 countries. Amazon's a client, Shopify, Spotify, Microsoft. They basically make it so you don't have to open businesses in 29 places to do business with emerging market customers. What I like about the story isn't so much the stock action, 15 times revenue growth in the last 5 years, 8 times EPS growth. It's growing a lot. We think it's a good opportunity for people that don't own any emerging markets.
And Nova, NVMI, this is a name. I've seen the ticker, but I don't know what the company does.
It's an Israeli company. They're in the solutions for semiconductor measurements. So, for example, all the foundries in China, Taiwan, Korea have to know how thick their semiconductor chips are. They're one of the leaders in that space. It grows, I think it's 40% revenue growth the last 5 years, 25 earnings, but it's almost a necessity for anybody making chips, and they don't have a lot of U.S. exposure, which, again, I think you should have some non-U.S. exposure because we're so U.S.-centric.
I got you. Good stuff, Michael. Always appreciate you, man.
Absolutely.
Good.